You know, many of us have fears around taxes and money, you know, and it sounds like your father was an attorney. What took you down this path?
Well, I mean, he definitely directed my path, gave me a choice of majors.
Gave me a choice
yeah,
of
and I
majors.
had a very slim list of what I could major in, and with business, it was either going to be accounting or finance as a emphasis. And in my very first accounting class, just fell in love.
You can see her face lighting
Which
up.
is so kind of funny, but I love a balance sheet. I love it. Okay? I love the job of accounting and that everything is supposed to balance, but that there are creative ways to do that. Like, not in illegal ways, but in legal ways there are creative ways to take care of things.
Well, I think that's because you have that entrepreneurial brain and business brain that you're not so black and white that it's like you can think a little bit beyond just what's right in front of your face. I told you she loves it. Like it's
light up.
Lighting up. Well, and I'm curious, and we'll get to all the meaty stuff, but I first think it's fun to get to know someone first. I'm curious, you know, so many women, including myself, I don't know, I had this intimidation around money and terms, like finance terms and the way I think about it. Like, it doesn't sound like you ever had that. Do you think that was just how you're wired or how you were raised? And then I'm going completely off script, by the way. I hate me right now.
I think I had a lot of confidence in my ability to learn, and I am a lifelong learner. I don't by any means think I know everything, but that confidence extends to believing everybody can learn. And so when I'm talking to my clients, I mean, I always have had Kleenex wherever I am meeting with people.
I've never cried in her office.
It's absolutely.
I cry every other day.
I'm telling you, it is a very emotional and humbling thing for people to talk about money. And
Yes.
while you talk about taxes being a snooze, it may be a snooze until you cannot snooze because you have a tax problem. Then it is no longer. You are just desperate to figure out a solution to whatever that problem may be. And as soon as you start making money, you're going to have a tax problem. It's just the way it is. You're looking at me funny.
She's like,
That's so
Yeah, well, I'm sorry. I mean, as a business owner, you absolutely will. So,
but I think that's great that you're so straightforward in a way that helps set people up for success. Like, you're not going to sugarcoat it to pretend like something's not going to happen, but you're instead going to tell the hard stuff and then set people up for success.
right, and
Which I
say,
think is
okay, here's what we can do to manage this, and you know, it's not uncommon. I mean, it's been less common the past year to 2 years because we've had an economic problem for the most part. But before that, it wasn't uncommon for somebody to come to me with excess of $20,000 in tax liability and no real ability to pay. And so I was able to help them set up a payment plan and then talk about how important it is to stay current on your taxes once you create a payment plan. And once you're doing that, it's like these people who help individuals eliminate their debt. Part of how they do that is by creating a way of life that is a path forward for a person to begin to embrace and make changes that encompass meeting those financial responsibilities. Same for taxes.
Quick clarify, when you say liability, do you mean bill?
Oh, that's a good question. So when you say they come to you with that 20,000,
Balance due.
so that's
So
how much
it's
they
all-
They might have actually had a $40,000 tax bill, have paid in 20 and still owe another 20.
Okay. So
That's a good
liability is just like a little.
what you owe.
I'm using
Yeah.
the term liability as like an outstanding liability with the IRS or state of Missouri or wherever it is that they owe taxes.
Yeah.
So that was not uncommon at all, and it certainly isn't uncommon when you are self-employed because you're paying your 15.3% self-employment tax for all the profits of your business. And it's that's before income tax. So it just does add up very quickly, and part of what I do with small business owners is use a whiteboard and talk through the way that your tax mounts as you are more profitable. And there are ways to manage your profit as well, and that's what we do. we are super busy meeting with clients between now and the end of the year. And this year is gonna be extremely difficult because normally what we're doing is advising them to go buy something in order to add some expenses. Well, guess what? We got a supply problem. And so therefore, we can't just say, go buy a forklift. There might not be a forklift to buy because we've got problems. Or we might say, hey, listen, if you have some jobs next year that you could go buy all the supplies for now, then we can deduct them this year. Yeah, it's a temporary solution to a ongoing problem as long as your business is making money, but some people can't do that because they can't get the supplies for their jobs next year early.
Well, and I think you bring up a lot of good points, but before we go down that path, I want to back up to that comment about Kleenexes. I don't know if it was May or April. I had just gotten home from Hawaii, trip of a lifetime, and looked at my balance sheet or my bank account and had been using my retirement funds to keep this business alive. And I was like, oh my God, we have 2 months left. I definitely texted Ashley. Literally, we were bleeding so much that I had 2 months left of runway to keep Rise alive. And I was in her office in St. Louis, one of the few times I was in St. Louis, just bawling. And I'm like, how am I gonna do? What am I gonna do? And she snapped her fingers, got us some action, and before we knew it, now we have the EIDL loan that I had been fighting for 18 months. So we're still standing very much here today because of Elizabeth. Yes.
And that's not true.
It
She's
is.
standing also because of all of the members that she has
Well, that's
both
true
in
too.
Denver. And
That's
because
true.
she is an extraordinarily passionate owner who is, like most business owners, willing to sacrifice your own future in order to bring forward a business. But thankfully, I've been doing this a while and I learned some things that we can do now.
Yes. And by the way, fun fact before we get back onto the tax information, she has 6 children. 6 children. And how many grandchildren?
3.
Isn't that so cool?
Yeah.
And runs this amazing company that has exploded through the years. So she is truly a superstar in more ways. And I do think it's a cute story before we get to the tax stuff. Again, I'm trying to make it fun. I think it's a cute story as to why you came to Rise. Dominic and stuff like that, your son.
So I wanted to be able to kind of elaborate on my Rise experience. I opened my firm in the traditional way, but with an idea that I wanted to be able to create an environment to entice the best of people in our profession who just leave because of the work conditions for being in public accounting. They're really tough, long hours, and typically very controlling work environments. We had technology cooperate and were able to basically set everybody up with home offices long before COVID ever came on board. But you don't really want to have strangers coming to meet you at your house who are looking for a CPA, So co-working space was a must. And we had a Regis location in St. Louis, a really nice area of St. Louis. But in the tradition of trying to really support all of our employees, we wanted to create co-working spaces that were as close to where people live who work for me as possible so that they could eliminate that commute time. So I found a co-working space in an area of St. Louis, it's Cherokee Street. It's kind of a artistic.
It's kind of like Santa Fe area.
Yeah, it's very much a very different environment than, so when my son, who is a partner in our firm, joined this co-working space the day that he walked into it, and we started having meetings there, and I could see he was making friends. He was really enjoying it. They did yoga. They have a lot of cool things that go on there, but I just didn't fit the culture. No piercings, no tattoos, I just did not have the vibe. So it wasn't just an age thing. There are people that are my age or older, but it just wasn't, I'm me, like this. So they said, Mrs. Stormer, can we take you to the conference room? Well, I told Dominic, I really want a space like this for me. I really want to be able to have friendships and conversations around the coffee pot and just create a great environment. So he saw probably an ad launch for the
I think
grand
it was an
opening.
article in St. Louis magazine.
Right, for the actual grand opening, and before the grand opening, we joined. We joined at the full membership.
Yeah.
And my very first meeting of Stacy and being in the space was the grand opening, and my first time with community was at a book club. It was a Brene Brown.
Yes.
It
Yes.
was so good. It was so good.
Yeah.
Anyway, I knew as soon as that happened, I have finally found my place.
Yeah.
This is amazing. And so, you know, I had to share an office to start with, and then we've grown and grown and grown. And I think what I love about Rise, I mean, there's a lot of things I love about it, but it feels like being part of an office while being an entrepreneur. That's what I feel like.
Mm.
I feel like I can have friends who we can share about our new puppy or whatever's happening, and it's just fills up life a lot better. COVID's been tough.
Yeah.
It's been tough on, it's been tough on this environment. It's been tough on all of us socially. And I think that I'm super glad that I have Rise as a touch point in my life for having connection, even in the middle of it all.
You can see why I love it. Okay.
Definitely.
Okay, done with the Rise commercial. Now the value that you're all here for, right, as I'm tearing up. No, but I just think it's hearing about taxes is so much easier when you actually feel like you know the person and you feel like the person's a human. And so that's why I wanted to spend a decent amount of time getting to see how cool Elizabeth is. But I do want to talk about taxes. So all of these women are small business. Well, just about all these women are small business or have to do with taxes, personal taxes. I'm curious, but I do think this year is unique in terms of very many of us are not flowing in the money. And so your advice this year,
From the government.
yeah, well, listen, that's a good point. I am flowing the money from the government. That's a good point.
Right.
Good point. But I am curious, like, what advice you give small business owners and or individuals as to like things they can, like tangible things that they can be doing, setting themselves up for success between now and December. I don't know if that's too broad of a question.
First of all, there needs to be a way for you to know how much money you're making in your business, okay? So if you don't have an accounting system, I will often advise my solopreneurs to just have a bank account where they try to run all of their business income and expenses from maybe one credit card, so that everything is isolated to that account. Preferably in Missouri, we have limited liability company. It's very affordable to create an LLC.
I think it's pretty
and
affordable here in
maintain it.
Denver too.
Yeah.
Does it cost anything?
$50. Yeah, $50.
Yeah,
Let's
it's
do
a
it.
one-time fee, and when you do that, yeah, it's just then you open a bank account with that particular tax ID number so that all of your activity is contained therein. Because if you don't know if you've made money, you don't know if you have a tax problem.
Well, and for individuals like being a real estate agent, I assume you get big, commissions. So money is not this like consistent salary. It's like all of a sudden a big thing of
Right.
income.
You have to run your own thing, don't you? Or
I'm actually not an agent, but
Oh,
I do.
operations.
That's right.
Sorry, I
Well,
keep
you
thinking.
need to- No, you're good. And then, but already, I mean, we have multiple different credit cards, and I'm in charge of allocating and going through and finding the specific ones, receipts for this credit card and this credit card to do exactly what you should be.
So there's still some applicable things.
Oh, yeah.
Okay, good. I was like, I gotta make sure everyone's getting
No,
something.
you're fine, please,
Yeah.
Kate, just, yeah.
Yeah.
Can we talk about kind of what happens before we even get to that point of
Ooh.
like the money coming in? So this
Are you
is
talking about like
kind
how to collect the money?
No, this is kind of where I'm struggling is not the finance piece. Obviously, I have one account, everything goes in as QuickBooks, and I allocate where everything goes. I can see all that. The issue I'm having is the money that barely comes in over here.
Yeah.
A certain percentage of that you have to withhold theoretically, or else you're getting in a tax situation. But then it's kind of like, well then, is that 30%? Is that 33? Is that 40%?
Oh, because that's all dictated based on how much comes in the year?
Right, that needs to be set aside for your quarterly taxes, because then it becomes like a pricing problem of, well, not really, if I price this at $1,000, I mean, when it goes through, when it's all said and done, the profit
Yeah.
Right, so people normally do wanna have that percentage. What should I put aside,
Right.
Elizabeth, so that I know that I have what I need for taxes? And the benefit of you having QuickBooks is that you can run under the statements, the company statements, there's one called the profit and loss. When you look at that, you're gonna see what your profit is
Right.
at the bottom. That's what you wanna base your percentage on, not gross revenue.
I was gonna say,
So,
so if
right.
you just spend all the money, you don't
You
really
don't-
have a tax.
Right,
bill.
exactly.
That's been my strategy all along.
Done. Leading over, no tax problems here.
Yeah.
Well, I
Just keep
I
your
feel like
money
it's a
in.
real different situation in that while I have my own, if I'm doing like side gigs and things like that, and I sell leggings, like it all goes through my LLC. My business partner, not that I've collected any revenue yet, but when I will, like, money will come off of that for taxes, and then I'm gonna get like double taxed, so to speak. Cause then income that I bring in, I'm then going to have to pay taxes on, so you start thinking about like $1, how many times is actually.
So you're saying like the money that comes in through your business partner will get taxed, and then you'll get it, and then
Right,
you'll
and
bring in
then I'll-
money, and you'll get taxed?
Correct,
And so you're thinking about how you'll get taxed on both ends.
correct.
Is there any way to optimize that? And that's a
I'm
unique.
trying to make sure I understand, so your business partner,
Is the business, everything is.
And so, well, and I think this goes to interesting conversation as to how you're structured.
Yeah.
Because I know you were saying you're a C Corp,
Mhm.
I'm LLC.
LLC,
I'm an LLC,
LLC.
but filed as an S corp.
LLC.
LLC, you guys work for people.
Wow.
And- And so,
That's what everyone tells you to do.
yeah, that's what the
See?
majority of my clients.
Well, I converted because I'm doing a Rob's, which is the
You're doing a what?
rollover. It's called a rollover for business startup.
Yeah.
So it's using my existing
Retirement
401k
assets, right.
assets that I've had since I was 19 years old, working at 18 years at the oil and gas company.
yeah,
So I'm able to take a portion of that, roll it into a new qualified 401k plan for my new incorporated business, and then purchase stock in my business for starting out. the-
Right, you have to have a corporation in order
Have to have a
do that,
corporation to
right.
do
It
that. I
has
have to be an employee, we have to have a qualified 401k plan, and somebody then to continue to invest in that 401k plan. All employees then will get the option to do this as well, so, yeah, I mean,
well, and
fortunately, there's a couple of like specialized companies that do just this, right, because it is a little bit of a taxi. The IRS knows this exists, but it's no penalty, no tax, like.
You don't get
hit
any
on my
penalty out of
401k.
taking your 401k, just.
Well, and let's back up, because I'm not forgetting your question. I think to understand your question, I think for people in the room, because it sounds like we're all coming from different places, if you can like high level, not in the weeds, talk about the difference between an LLC, a C Corp. Is there anyone in here that's an S Corp? And
I filed as an S
Yeah.
corp.
Yeah,
an S
I mean-
Corp. And just like, why do we need to know this? Or what are the differences? Or, it sounds like you have a very clear reason why you're a C Corp. I am still just an LLC. I know Elizabeth would love me to be an S Corp, which I might become. But I feel like we chose not to because of expansion. There was some reason we chose not to. So for people that are like hearing these terms for the first time,
Is there a book?
Okay, well, first of all, an LLC is a disregarded entity. It's like plexiglass to the IRS.
oh,
They look through to the ownership. If there's a single owner, it's gonna default to looking for an individual income tax return for where you're gonna file. If there is more than one, it will default to partnership, okay? With that, you have the opportunity to elect to be treated differently for tax purposes as an LLC. You can elect to be taxed as a corporation, and then you can elect S status underneath that. What does all this mean? Corporations pay taxes based on corporate tax rates. In our current legislative environment, there's a strong reason to believe that that is going to be an increasing rate of tax over where it is right now. There's a lot of hubbub about that, okay? An S corporation, when you elect S status, the profits go out to the owners and you pay based on your individual income tax rate.
Yeah.
Also, when you are an S corporation or a C corporation, you have compensation. If your company is making money, you're going to have compensation, just like you do as an employee of any company. You're going to manage your tax liability as much as possible through your withholding. Okay, so in an S corporation, our S corporate shareholders, we are managing their tax liability with their salary, and we're driving their salary to be as low as we can make it while still making it reasonable and cover whatever we think that we need to in taxes, because estimated taxes are just a problem in that you're supposed to pay them evenly over the year or have support for why you didn't need to pay them evenly, and if you don't, you're penalized. So,
I was
yes.
gonna say, so the withholding, should be done in your paycheck.
Correct.
Every time,
Correct.
wage withholding, more so than like a percentage of the income.
Right.
Well, and I think the reason your question is different is because you are an LLC and not a corporation.
Well, and I also think we're in a different place because like you have steady revenues coming in.
No,
So like,
that's, plus I was just there.
right, but I mean like that's
You're
kind of-
fine.
That's kind of the difference is that I see that like you're an S corp because you can pay, you can withhold. When you're like an LLC and it's 1,000 here, 3,000 here, I'm trying to figure out what is that percentage that I should keep in that piggy in order to pay back.
Right, so she's getting like taxed, at least if I think your question, you're getting taxed as the business and then it comes to you as now your personal income and you are getting taxed.
Well,
Second,
I only
you
pay, I
think,
only pay
yeah,
personal.
right, but
Right,
you
so
still
you're-
won't, yeah.
Yeah.
You have a partner in your LLC, is your no, you just have,
I just get paid from him, like.
Are you a
Ah.
1099?
Like, yes.
Ah,
Okay.
So you're 1099. So you're not.
So she is paying her own,
But you still have your
Payroll.
own things you're doing as well.
And
so then
that,
you're 1099. You're your own business,
Right,
or contractor.
so
but you're still your own business.
Totally.
I'm just trying to figure out, like, is it 30%?
I think it's 40 was what I heard. 1099, 40%.
Goodness.
It's complicated.
that sounds like a great thing to have coffee with Elizabeth
Yeah.
to really dig into because it does sound a little bit. Yeah, yeah. But it does sound complex.
I haven't taken a payout, everything's gone back in business, so it's never been an issue, but as we start to ramp, I'm kind of like, alright.
Well, I just think
Is
what
that-
you get paid is totally separate. If you have like a certain, right? Like, cause you're your business. So your business, whatever he pays you as a contractor, now that's your revenue, period. So you shouldn't have to pay, are you thinking he's paying taxes? He's paying
He's
you
not.
to get it off the books.
Yeah, he's
So
not.
he's
paying
not
taxes.
gonna pay taxes. He sends it to you, so you have to deal with it.
I'm gonna pause and see what Elizabeth has to say. Do you have any?
Good.
I'm gonna pause and let the expert. No, I'm
I mean,
just
I think that, it's very common for entrepreneurs to have multiple ventures. Okay, this is not uncommon at all. Even physicians have multiple ventures. People who have very high demand professions, if they're entrepreneurial, they just see an opportunity, they're wanting to take it. As their tax preparer and advisor, my job is to try to make it the best tax treatment possible.
Mhm.
So frequently, we're going to be better off combining business ventures into a single business place where we're reporting for tax purposes. So the LLC could be a place where you are bringing in both types, all the types of income, so that we can manage your tax liability from one single place, rather than looking at 3 different places. And as far as how much to save, Stacy's right, it's personal and it really requires information. That it isn't, I could tell somebody, save 25%, and for one person that might be way more than enough, for another that wouldn't be nearly enough. It just depends on the circumstance.
Well, and I bet it also depends on the stage of your business and how quick it takes things to ramp up and what kind of things you're charging out at. You know, if you're charging out at 1,000, 2,000, 3,000, I think that's a very different conversation than if you're going into a corporate company and trying to get a $50,000 retainer.
I would love that.
Yeah, but I'm just saying, I think you can answer your own question based on whom you're selling to and how you're selling it.
And then I think it's, like you just said, it's important. This is why we have people like you, right?
Right, and
Taking
I-
money at different stages
Yeah.
in your business.
Well, and I also want to go the personal route too, because I know there's people in here that maybe aren't necessarily businesses. When you think as an individual, because even though we're all, you know, a lot of us are companies, we also have individual taxes that we have to pay. And I'm sure there's things like, I know my husband's always bugging her at the end of the year, like, how much money can I put in my retirement? Because I have so much loss, he capitalizes on my loss.
He's hitched
Mr.
himself.
Retirement Man. But I'm just curious, like for people that aren't businesses and even people who do have businesses, like what kind of individual things should I be asking myself or thinking about to try to optimize my tax? Or Anna Marie, who's an employee who usually is bugging her dad come April. Are there any smart ways to spend our money or any smart things to be thinking about these next couple months?
Well, it kind of, I'll give you a broad sweeping brush of ideas that I've had to share with clients. So I have clients who get restricted stock units or options that vest in a particular year, and so they get a lot of money on their W-2, whether or not they actually have cash in hand. And this can drive their brackets up into the very top, 35, 37%.
So like a company gives an employee stock.
Right.
Okay.
And then their tax bracket.
Right.
Now
right.
they're taxed at a different rate because they got all the stock.
Their bracket is pushed up because their income is pushed up, and
Even
it's
though
in
they're not
capital
seeing the
gains,
money.
right?
Well,
Right.
and that happened too. Like Kate and I, we had to talk about that because like my business on paper is valued at a certain dollar figure, and there was a year in which we were talking about her being a partner. I mean, she's always a partner, but making it official. And it's like, well, what's that value that she's in theory taking on, even though I'm not paying her money? And so I think that's what you're talking about.
Right, and so these people who have a tax problem in a given year, or say a real estate agent who just has a fantastic year with a ton of closings that they're gonna have unprecedented income. Well, we have some decisions that we need to make, and some of them need to be made before the end of the year. Some of them can wait until April 15th. There are different retirement plan options, and some of them will allow you to wait until either the due date or extended due date of your return to fund. But one of the things that a lot of my clients have used is a charity through where they are able to have basically a fund at Fidelity. I'm sure there are other places that do this as well, but I know Fidelity well. They will put in maybe 5 years worth of charity all into this account at once, and then dole that out to their favorite charities over a period of years, because this year they're going to get more tax savings off of that charity that they contribute this year.
Hold on, I want to make sure I understand this. So like the company Fidelity has this account that's specifically for charities that you can put money in.
It's your own account.
But is it
that
like a
it's
special name, like charity account?
Bond account.
Yeah.
trust account,
Okay.
a charity trust,
There you
yeah.
go.
Yeah.
Because I'm hearing this thinking this is really cool, but
I
it's
probably have
definitely
the
in my head.
wrong name
No, no,
anyway. I would
it's
ask
Fidelity.
Callie,
Plan.
who's sitting here, but
Yeah,
she doesn't.
yeah.
Anyway, it is an account where you can put money and then you can direct them to pay your charities.
Oh, that's
Yeah.
cool.
So you can put you have 20 grand you want to take off the bottom line. You put it into this account, so it's showed to the IRS as a donation expense. And then over the years, you don't have to, it doesn't have to go once.
Right.
Right.
Why is that? Why does that matter to me?
Because if you're in a tax bracket that's 37% this year, but normally you're at 24%, you're going to get that 13% differential in deduction and savings of your taxes. That's just federal, because you're deducting it this year. You're not gonna deduct it when it goes out to the charities over the next 5 years. You're deducting it all this year.
Is it going out every 5 years because that's how the fund's set up and how they want to manage it?
No,
Or is that irrelevant
that's
to the
just-
conversation?
That's just, this one particular client that I had, who was my very first person that I directed in this way, she chose 5 years.
Oh, but it doesn't have to be
It could be
5
10,
years.
it could be 20, it could be a really long
Oh,
time.
that's
Or you
really
can just jam it all to them at
Yeah,
once,
you
right?
could just push as much cash as you want to into that.
Although they might expect
in
that
order
every
to.
year.
Well, I was
Yeah,
just saying, why
you're right.
would you do that instead of just giving it to the foundation?
So you're saying like instead of like giving Kenzie's cause it's
Yeah.
10 grand.
Why
Well,
would I do
because
this
next
without-
year they're gonna come back to you as a $10,000 donor, and you're not gonna have
Be
10
like,
grand.
here's that 10 grand.
But you
back.
would have 10 grand for 3 years. You're a $10,000 donor for 3 years,
Oh,
as
interesting,
opposed
right?
to like a $10,000 and then I come back to you
Listen, I don't have it.
looking
This
for it.
particular client had synagogue fees that they wanted to like fund in.
Okay,
and then
got
push
it.
them
So there
out
was like a
over
very
period of time. Like they had an actual purpose of exactly how they wanted to do this. Others, it is kind of a commitment that you've already made to your university or whatever.
'Cause you
already
could
made
do
a
just
pledge,
Kenzie's
right?
classes, yeah.
Right, you
Yeah.
could do whatever you want.
It'd
But
be
this
the
is
same
just
result.
one particular example. Another option is, if you're having a great year, to buy a vehicle, and it, not just any vehicle, but a vehicle that is either like a pickup truck or a SUV with a vehicle weight over 6,000 pounds.
And Derek has researched what's over 6,000 pounds. It's really interesting to see what's over 6,000 pounds.
What are a couple
Don't
things?
ask me, I just remember him researching it.
I mean, there are
Any industry, any business? Or no, is it specific industry?
any business.
Please
as
do
long
not
as
tell
you,
my husband.
So if you
I
purchase
mean, you
a car,
have to use the car. If you're going to take depreciation and actual expenses on a vehicle, you have to use it for business. You can't just take a personal car and make it a business deduction. So the
But if
way
you
that
do.
we work our way around the personal use component is by basically charging back personal use to the owner, and picking up income at the standard mileage rate for the personal use. So in any case, you're going to want to minimize how much personal use you're having on a vehicle. But anybody who owns a business pretty much knows that your whole life is your business to some degree. Like,
I was
So
just
as
gonna
opposed
say,
to
you
getting
could
a business expense for my mileage or
Right.
whatever.
I was gonna say, like,
you use
you-
it the other way around and it's a personal reimbursement as opposed to a business reimbursement. Right, so like if I went for something, you charge mileage to the
Right.
business, this would be,
Like if you
in
went on
fact,
a
the
girls'
other way
trip.
around, on a personal
Right.
trip, you would reimburse the business back.
that's
Interesting.
right.
Did you have something? Or
well, that's mind blowing. So, well, because it would be a stretch to say that we need a truck for or like a
Like an
bigger
SUV.
car.
You've got
You've got
equipment.
tons of supplies.
Total equipment, like,
We have the contractors bring the supplies, but we could start using, I mean, that's just a really interesting.
Yeah, but if you drive to work, aren't you using your work car to get to work?
You should have a home office so that whenever you leave your house, the mileage meter is ticking. You start work at your home, you end work at your home.
What about buying, what about, okay, so if it was depreciation for the owner and then to the mileage that we use personally, you charge to the business,
you reimburse.
you
It's
reimburse.
basically like, you would have to look at it, let's say that you had the equivalent of $6,000 in personal use. That's a high number, okay? Basically, you're going to have profit in your business of $6,000 increase that you wouldn't have had. That's gonna offset the deductions that you're getting on the car. But remember, you're deducting the insurance through your business, all of the maintenance of your vehicle, if you're using actual.
Does it have to be these big cars? Can you get,
Well,
like, a
that's
nice
the
little
better
zippy one?
deduction, you can get
Okay.
a smaller one, and there are certain amounts that you're limited to, but I think what I would like you guys to take away from this.
Like, I want a
Okay,
car!
like, I want you
I'm
to
not
do
doing
it.
a car.
I can get a car. You get a
So, let's
car.
go
My
truck
truck
shopping.
tray is
Yeah.
cars,
Yeah.
yes.
Truck
And then
shopping,
also,
I like it.
I'm
Does
giving
it have
you
to be branded?
information that's based upon tax law today, but
Sure.
there are changes all the time, and in fact, we've had tax law changes as late as the 28th of December that affect the year that you're in. So this being
Does that mean you should wait
a
then,
reality,
as long as you can? I know that you said that
Well,
for
that's-
some people you should, do it early and make decisions as early as possible, but if those changes are happening in late December, should I wait until,
well, in
That's a good question.
in this current environment, you can't, because there is a shortage of vehicles. Go ahead.
I have a question about that more specifically, if you are, like using, like she was talking about like timing of like, kind of rolling the dice, can you just hire someone like you and deduct that on the business taxes as well? Like, can that be an
Oh.
investment into that strategy?
Yes.
Okay, that's what I was wondering.
So
You
like,
can.
so like you could say, I wanna work with Elizabeth,
Right.
her fees are X.
Yeah.
That's X off, and I have an excess of X anyways.
Right,
So I can almost, do some people like prepay for your services?
Yes, we have a lot of
Oh.
clients that prepay in a year in which they're profitable. But I want everyone to understand that this is a relationship that you are forming. This isn't like walking into Liberty Tax where there's people that are only there for a few months of the year and then they're gone. The client base that I service are people who are in business, or they are creating a relationship that they're gonna be able to grow in and rely on, because they value being able to ask questions and trust that they're going to be able to press in until they understand. I have a guy, one of my earliest clients, who I can't tell you how many hours we spent for me to explain to him and have us get clear on exactly how 179 expense depreciation works, bonus depreciation works, how it will work in his business, what happens later. He's like, Elizabeth, I'll pay you your hourly rate. I know we've spent, and I'm not kidding, 16 hours talking about this, but I think I'm starting to get clear on it. And I really need to understand, because this is my business. I'm like, that's fine. You know, I'm happy to help you. Anyway, it is. It's a relationship, and some people don't need this. Some people don't need a relationship with a CPA. Yes.
That segues into the
Yes.
question I've had. So as a solopreneur, could you talk about, and so just me, and can you talk about kind of the progression that you will see from solopreneur to larger business to corporation, and like what sort of financial support you need? So what's the difference between a bookkeeper and a CPA, and bringing in legal, and like, can you just talk a little bit about?
So like, when do you need different things? So
Yeah.
like, what is somebody who's just
and
starting out
what do people
need?
special, like who should I be going for X, you know?
Yeah, that's a great question, Heidi.
Well, most small businesses start and are just excited to get to $10,000 in revenue and beyond. And as you get to the point of having over $40,000 in profit, that is revenue as opposed to expenses, there's a market change in what's happening with your taxes.
Okay, hold on, pause. Let's make sure we're on the same page. So 40,000. So you're
Profit.
saying profit for a year.
I have a follow-up question to this. So if you, let's say you're a solopreneur, coach, consultant, what have you, you get 100 grand in revenue. To get to 40%, or to get to a $40,000 profit, I'm trying to figure out. Okay, so you would have to pay yourself, either through like a paycheck.
Not necessarily.
Not necessarily, because you could just pay yourself 100 grand.
Not if you're an LLC. It
But
comes
you're
out of the
still
draw.
paying tax
But
on
then you'd
it.
have to pay taxes like wage withholding like every month, and that might be a better
I don't think that
way.
isn't, as a single member, that it doesn't work that
I'm
way.
gonna go back, because we're not
Yeah.
finished.
Oh, well,
that's
I thought it was related, but maybe it wasn't.
Yeah,
It
yeah.
might be.
Well, it's
Because
different
it
when
is
you're
a
single.
I will get to that. Your tax is gonna drive some of your decisions. The difference between a bookkeeper and a tax accountant uses the books to do what we do. Without books, we're very limited in what we can do to help you. A lot of times, my best clients, my most successful clients, they're fabulous at tracking what's happening with their revenue. They have QuickBooks that bills their clients, for example, and gets them paid, but they don't have the expense component in their QuickBooks file. They just are using QuickBooks to get paid, because, you know, that's the lifeblood of their business, to do bids, to do everything related to driving revenue. My job then is to get the system so that we're getting as many expenses as possible to offset that revenue in order to be able to see what that profit is. Our firm specializes in helping small businesses, and we provide both accounting and tax help. We have bookkeeping. We train people on doing QuickBooks for themselves so that they don't need our help, and we'll just answer questions if they have them, and build the lowest fee possible.
Do you find that a lot of early stage people are doing that? A lot
Yes.
of early stage people can just get away with QuickBooks and
It's-
understanding QuickBooks.
I mean, the platform is so easy, like the online version, so you do think that that's at least a good place
in your
to
early stage.
start, right? Just
It's a
to
great
say,
place
I don't hear
some
anybody
place
talk
my
about anything
expenses,
else.
yeah.
It's QuickBooks, right, life.
And so
I
then,
mean, it automatically does.
so
it
the
too.
individual is sort of managing the QuickBooks in theory until you get to this 40,000
I mean, I used that number because that is a number that that has significant tax impact. And when that happens, you're willing to pay somebody to help you manage your taxes, and do that with advice that is gonna get to your answer in just a second on payroll, okay? So, your need for bookkeeping, it should be as soon as your business is able to
Once you're taking it.
have revenue in, you should definitely wanna have a bookkeeping solution, and you can start just by using QuickBooks yourself and doing the best you can with it. and find if you need help, that there are pro advisors who assist people in figuring out how to do things for themselves in QuickBooks, and in the end, provide your accountant access to that for doing your
Like you said,
taxes.
it's so easy, especially if you have one bank account where everything is coming in and out. It feeds into QuickBooks. I set mine up. I have a calendar. Every month I go in and like, okay, this expense is coded to this
Right.
expense line, and then it learns it. So all that stuff is like intuitive and it flows to your P&L like very
Right.
easily.
Super easy.
As just a bonus little bit of information, the problem in QuickBooks that a lot of people run into is when they have more than one bank account, transfers are tricky in QuickBooks. So if you have that situation, don't feel dismayed. It's just a problem in the way that QuickBooks Online functions with transfers. So, I don't know why it's confusing and hard, and probably because it's all balance sheet.
I know, can't we
Really,
just like
that's
disregard
really-
that transfer though? Because it comes in like, you can track that expense, it adds a second line and calls it a transfer, and you're like, no, that was a payment from this account to this credit card for that expense. And so it just so I almost like disregard
Yeah,
those
you
transfers because
can't-
it counts for it later.
Yeah, you can, when you're doing your reading of
Okay,
the transaction, say disregard and find another way that you're
That it's
reporting the
making it, yeah,
transaction. Correct. Okay,
See, I told you dangerous.
now
like,
the
I mean,
next
that's
question
like-
is, okay, when do you need an attorney? Well, attorneys do a lot of things for small businesses. They draft contracts. They help you review your leases to make sure that you have fair terms within your lease. And as soon as you have multiple unrelated owners in a business, you need an attorney. Like, if you are opening a business with someone else, you need an attorney. Because that document, that operating agreement that drives what happens in your business is a super critical component of how your business runs into the future and what happens if you run into problems in that ownership structure.
But from a tax standpoint, is there a need for a lawyer?
Uh,
Because I don't know if that's the question you're asking or
I
just
just
general.
wasn't sure, yeah.
Yeah.
I was just asking to be comprehensive.
Probably not. So now the question has to do with how much money can you take out of your business? Or, well, couldn't you just take all of your money out? Well, you can, and most people do, I mean, take the money that they can out, but what is the tax consequences? Which goes back to this big
Mhm.
triangle of, well, how much money do I need to put aside for taxes? Well, it depends. If you are an S corporation, you can take money out in more than one way. You can take money out as payroll, and that you're gonna pay the equivalent of the 15.3% on, because you're gonna have your Social Security and Medicare withholding, and the company's gonna have to match that. And that's just, if you look at your pay stub, you're gonna see your gross pay, you might have some other things up there if you have a 125 plan and things. Then you're gonna see federal withholding, Social Security, Medicare, and your state withholding, and possibly local. Those Social Security and Medicare, that adds to 7.65% up to a certain wage limit. 168,000, 100 and something thousand, I keep
Yeah.
notes on this.
But so
Okay.
the employer pays that same 767?
Yeah, yeah, okay.
But as an LLC, is
Then
someone
you
like,
have to
someone
have
like
15.
Heidi, who's not an S corp,
She's gonna pay
I
that,
pay the whole.
15.3.
right,
Yeah.
right.
Well, I guess it would probably come out in the math, and this is where someone like you comes in, but I guess I don't understand why you would just never show a profit and run it all through payroll.
Well, because you're gonna
That's a
pay
strategy.
15.3% on all of it. No, in an S corp, you wanna carve some out as salary, and then you wanna take the rest out as distributions. And also
15 is less than distribution?
reimbursements. Well, because distributions are just taxed at your marginal tax rate. They're not.
It's a math thing, this is where you
Yeah,
need a
it's
CPA
not-
to tell you.
Right,
wh-
it's
where
not
it's good
just
for
the
payroll and where it's not.
15.3%.
and I'm gonna take Ashley's question, then I'm gonna cut it, and then you guys can all stick around and chat. And I have a few things I wanna say. Go ahead.
Oh, I have a question about like, so earlier this year, I was my own LLC, and now I'm like a full-time staff member at another company. Like, I don't even know how to navigate or uncommingle the kind of like
That too.
I like for a while, I had been using my, I had got like a special card for my LLC or whatever, but then I started using do you do for that? Do you continue billing the LLC even though like I only have one client meeting a month that I like do on the side still as like the LLC. Do I like just stop charging that? Cause I use it once for the LLC, but I have to have it as a monthly payment for like anything over 40 minutes for a paid thing for Zoom, right? So like, how do you balance that out? Do you like apportion 40% of that to the LLC?
Yeah.
And it's like a $15 charge.
Yeah, you take it all on the LLC.
Okay, so you just leave it on the LLC.
I mean, why? Because you have to have it.
Right,
Even if you only use it once a month, if you had nothing else,
Okay.
you still have to have it
right,
for the LLC.
okay.
Yeah,
So
you
it's
take it.
fine.
So anything that you have to have, you
Yeah.
can put through the LLC.
Right.
You can't operate a business without your Canva. You can't operate your business without your
It's so
Zoom.
stupid, it's these little, it's like 5,000 charges.
And so in that instance, like, as she's continuing to deduct things, I mean, you end up with a business loss if you didn't,
Right.
right? So you just, these things all turn into this,
And then you don't
well, I
have to
spent
pay
all
them.
of this, but I didn't bring in the
That's fine.
revenue, like, what is, can you talk about like that?
So the technical issue in taxes is this a legitimate business or is it a hobby? Okay? Hobby loss rules basically just limit your deductions to your revenue, which means you can't generate an actual loss. You just carry those deductions forward to offset future revenue, but it's just stuck there in this stasis. Well, when are we gonna say something is a hobby? The IRS will give you at least 3 years to generate a profit, usually 5 years if you're seeing increasing revenue, even if you are continuing to have a loss. And it's a judgment gray area of tax law, whether or
Why
not
don't you go
something is
7 years without a
Yeah.
profit? Or at least 6 years without a profit, I can confirm.
Yeah, and I'm
As a
saying,
hobby.
Just
I
saying.
have some very conservative clients, and I have to follow their lead, you know, they're gonna do what these are high earners, and they might have a spouse who's involved in something where they're like, I do not wanna bring any attention to my tax return, limit
Yeah.
my deductions to that revenue, please just do that.
Got it.
I don't care how much money you could save me in taxes, I need to sleep well at night.